Alan Kohler here with That's Business. And it's been a big couple of weeks in housing policy. So we've got Susan Lloyd-Hurwitz, the chair of the National Housing Supply and Affordability Council, which was created as part of the National Housing Accord in 2022. Now, Susan Lloyd-Hurwitz was chief executive of Mirvac, the property development company, for 10 years. So she knows more than most about how to get more housing and what demand looks like. In her new job, she is supervising the collection of data about housing supply and demand, doing forecasts of it, and keeping an eye on the Housing Accord target of 1.2 million homes in 5 years from the middle of 2024. And the answer is, it's not going well. They're behind, and according to the council, will not make the deadline. But perhaps the most fundamental question is, and we get onto this in the interview, is whether housing affordability will go back to the way it was, or will we have to get used to the way it is now? That is, will the housing crisis, the housing affordability crisis, become a permanent crisis? Well, to answer that and more, here's Susan Lloyd-Hurwitz, chair of the National Housing Supply and Affordability Council. G'day, Susan Lloyd-Hurwitz. Thanks for joining us on That's Business.
It's a pleasure. Thanks for having me.
Now, there have been a lot of developments in the past week on housing policy. Are you surprised that it's now become a focus of both major parties?
I think it's been a long time coming. We've underbuilt in this country for decades, and there's been a growing focus during the Accord period with all states and territories and the Commonwealth Government focusing on housing. So this is just an extension of that, I think, but certainly a lot of activity in policy settings around the country.
Both major parties are now talking about demand as well as supply. Is that a good thing now? And has it taken too long to get to that?
We do need to think about both sides of the equation, and we need to think about demand in a couple of ways. The total amount of demand, which should guide our thinking around how many houses we need to build, how much demand will there be in the system, and how should that inform our policy settings around migration, for example. But we also need to think about it in terms of the seductive nature of demand-side policies, which usually only serve to do one thing, and that's push prices up. So the real hard work that takes patience and persistence is focusing on supply.
So the budget from the government obviously was largely about the redistribution of tax and wealth in the name of intergenerational fairness. The opposition in its budget reply was talking about immigration and the number of people versus number of houses. So do you think the fundamental problem is tax and wealth distribution, or is it the build and supply number of people issue?
I think the complicated thing about this problem that has been decades in the making is that there isn't one culprit. There isn't one thing which is causing the very significant increase in house prices and in rent, such that almost 30% of renter households are in rental stress now. It takes 11 years to save for the median deposit, and if you get a new mortgage, it takes 40% of your income on average. I mean, that's a problem that is multifaceted. It's not just migration, it's not just tax, it's not just construction costs, it's not just planning, it's not just land release, it's not just infrastructure, it's all of the above in a complicated spaghetti web, if you like, of causes that need to be unraveled and picked apart. But the tax is a contributing factor, as is net new demand.
Right, so let's just go through the policy announcements one at a time, if that's okay. The reversion of capital gains tax back to a CPI adjustment after 26 years of a 50% discount instead. Will that result, do you think, in less demand and fewer houses, or fewer houses, or will it be both? I mean, because a lot of people are saying, well, it'll actually lead to fewer houses and rents will go up.
So I think the Treasury modelling that they released suggests, and the council hasn't done this modelling, so I'm just taking Treasury modelling for what it's worth, suggests that it would have a negative impact of around 35,000 dwellings over the next period. But they also are saying that it will be offset by 65,000 new homes supported by the $2 billion of the infrastructure payments that they're giving to the states. So on balance, they're saying that it's pro-supply. So we'll have to see exactly how consumers behave. It's untested, unproven. We don't know how investors are going to think about investing in shares or businesses or property, whatever the investment is. We don't know how people will respond yet. We'll have to wait and see on that one. And I would say that taxes aren't to be picked off one by one. They work together for good or bad. And so the combination of three particular taxes, so the previous setting on capital gains tax, negative gearing, and stamp duty, highly incentivize us to overconsume housing. And so we do, because it has been, particularly your primary residence, a very, very tax effective way to invest. So we'll have to see how consumers behave. But as I said, it is but one contributing factor into the whole housing ecosystem.
Now, what about limiting negative gearing to new houses? Is that a good idea?
I think it will encourage, that's pro-supply. It should encourage people to invest in new builds rather than in existing housing, because the tax settings are more attractive for that. So again, we'll have to wait and see how investors behave. But having negative gearing available for new builds is pro-supply, so that's a good thing.
A lot of people are suggesting that the problem that both of those things, those changes, will limit people's ability to save for a deposit to buy a house, because of what they're doing is rent vesting. They're renting in one house and then buying another house as an investment. Is that a concern for you?
Well, I think, again, it all depends on how people behave with these new settings, and we just don't know yet how people will think about whether they rent and save. And as I said before, it's now 11 years it takes you to save for the median deposit, which is a long time to be focused on that. So we'll have to wait and see how consumers behave.
And what do you think of the Coalition's plan to limit immigration to housing, to the number of houses being built? Is that a feasible idea?
I think the question of migration really needs to be looked at for the overall economy, because this is a nation that is built on immigration, and we need skilled labour. And in particular, we need skilled labour for the construction sector. One of the problems in the housing sector, and why we've got approvals are up, but commencements and completions aren't, is because we don't have enough skilled labour, as well as costs being very elevated and causing feasibility problems. So I think that the greater good is that we need skilled migration, and so we need to make that a feature of our economy, and then we need to build the houses for the migration setting that we're thinking about, not just migration's effect on housing, but migration's effect on the broader economy. And the greater good is to bring skilled migrants into this country for the overall economy.
Well, one of the things about your State of the Housing Market report that comes out, the most recent one, is that you talk about net new dwellings rather than housing completions, because, obviously, and I've been forgetting that myself, I tend to look at housing completions but forget about demolitions. And according to your data, there's about 25,000 demolitions per year. So if you look at net housing, what's over the housing accord period of 5 years from middle of 2024 to 29, what's the council's prediction of the number of net new dwellings that will be built over that period?
So net new supply is 862,000. Whereas gross new supply, before the Iran situation, we were forecasting at 980,000.
So you're saying that net dwellings over the 5 years of the accord period is 862,000. Well, that's a long way short of the 1.2 million target. But we don't know, I suppose, whether the 1.2 million target is net or gross, do we?
No, that's never been clarified. We always look at the target as suitably ambitious. And I think the whole accord has galvanised action in the markets. All states and territories are reforming their planning systems. There are an enormous number of measures being put in place, and you can see it in approvals are up, so that it is starting to work. We just got to translate those approvals now into commencements and completions.
Right. But you're saying, the council's saying, that they're going to fall, 340,000 houses short over that 5 years?
Of the 1.2 target, but yes, that's the number.
Net dwellings are the relevant number, aren't they?
Yes.
So what do you think? Let's look at the target for a minute. What the 1.2 million, was that based on any, as far as you're aware, in any forecast of demand? Was that or was it just a round number that they came up with?
I have no insight into how they came up with that target. But as I said, I think it is a target which has galvanized the market, and you can see changes in the system which are going to take some time to bear fruit. And I often think that life isn't going to end at the end of the Accord period. We're going to keep building houses. So it's a nice target to have, galvanizes the system, but the key is just to do everything we can to build more supply.
Right. And so the Accord, I think, is largely focused on approvals, right? So the states have come up with, the Commonwealth's got this number, and then they give it to the states, or they divide it up among the states, and the states then divide it up among local councils. That's kind of the way it works?
Yeah, so the target is apportioned to the states, and the states then are going about trying to meet that target, partly because of some of the money that's on the table for exceeding that target.
Yeah. So, but is there a difference between approvals, which is what they're kind of talking about, and the amount of housing being constructed? I mean, someone told me that there's 100,000 houses in New South Wales that have been approved but aren't getting built. Is that kind of thing happening?
That absolutely is happening. My understanding is that 1.2 is completions, not approvals. But you need to get through approvals to commencements to completions. But absolutely, the combination of lack of skilled labour and escalation in costs, largely due to the supply chain shocks that we're seeing, are really making feasibilities enormously challenging, and that's hampering commencements.
Yeah, that's right. I mean, you're right. I mean, that 1.2 million target is actual houses, not just approvals. The trouble is that the state government and the local councils, they can't actually force builders to build houses, can they? I mean, and developers, because the projects have to stack up. So, I mean, to what extent is that becoming the issue, that the development of new housing is proving difficult to be profitable?
It absolutely is one of the key problems currently, along with lack of productivity that is one of the least productive sectors in the economy. The combination of a whole raft of features, cost being one of them, infrastructure being another, planning being another, they all combine to make the system very, very challenging. It's why it doesn't respond properly to demand signals.
So, and both parties now, as you mentioned, the Labor government in the budget has got this fund, an infrastructure fund of $2.1 billion, which they say, as you point out, will lead to 65,000 houses. Does that sound right to you, that number that amount of money will actually produce that many houses?
To the extent that the other problems in the system don't get in the way. So enabling infrastructure is one thing, but you need to have a feasibility that will stack up as well, because as you rightly point out, people are not going to invest in building more supply if it's not economically feasible.
And the coalition's also got an infrastructure amount that they're talking about, which is $5 billion. And they say that that's going to lead to 400,000 houses.
Well, they've clearly got different calculations going on there.
Well, they have. The coalition's numbers work out to be $12,500 per house, and the government's is more than twice that, $32,000 per house. So what do you reckon is the right number?
Oh, I haven't done the modelling on that, so I couldn't speculate on which is the right number.
But okay, so but clearly this sort of money going into infrastructure is a good idea. This is one of the issues that needs to be dealt with.
Absolutely, it is.
And the other things you were talking about, productivity and so on. What does the council? What do you think is needed to be done to improve that?
So a couple of things really stand out there, which are being addressed to some extent. One is simplifying the National Construction Code and the environmental laws to make things less complicated and less onerous. I mean, the National Construction Code is something like 2,000 pages long. It's very dense. It's not digitized. It's very hard for small builders to work around. And there is some work going on in simplifying the National Construction Code and actually making it national, which it currently isn't in any meaningful sense. And then thinking about modern methods of construction and how we build differently, which a number of different parties and companies are getting quite close, I think, to being able to do modular construction in an economic way. And we haven't seen it yet at scale in this country. I often think we shouldn't call it modern methods of construction, because in other parts of the world have been doing it for decades. It's just never taken off in Australia. So if we could take some red tape out of the system, improve the National Construction Code, and really crack modern methods of construction, I think that would make a difference to productivity.
But by modern methods of construction, do you mean prefabricated houses and building them in factories and then bringing
Yes.
them out to the site and so on? Yeah.
Yes, so that's one element of it. Also, digitization and using AI more effectively for site management, for example, and when thinking about a high rise. So there's a raft of different ways you can think about modular construction, but the basic principle is prefabbing in a factory and assembling on site.
Just on the National Construction Code, it's very difficult to wind these things back. I mean, it's 2,000 pages, but I mean, how did that happen, and how it possibly can they get it back? I mean, these things tend to ratchet up and stay there, don't they?
Well, it's very important that we don't let that happen. So I applaud the government for tackling the National Construction Code, because particularly for small builders, it really is very cumbersome and very onerous and costly.
The council has developed something called the Housing Outcomes Framework. What is that, and what does it show?
So what we were developing for this report is a broader assessment of how the market is functioning, getting away from the singular measure of how many houses do we think are going to be built, because that's just one measure of, is it a healthy housing system? And so the outcomes framework looks at 8 different outcomes with a couple of measures for each, and then assesses, are we going backwards or are we going forwards on each of those measures? So if you take one example, so outcome 7 is homelessness is brief and non-recurring. So we look at the rate of homelessness, and we look at whether homelessness services can adequately cope with the amount of homelessness. That's getting worse in terms of homelessness. Or if you looked at outcome 2 is housing is safe and environmentally sustainable, and we would look at energy efficiency, for example, in housing, and that is getting better. So across the 8 measures, there are 23 metrics that we're measuring, and 11 of those are getting better and 6 are getting worse. So on balance, we are making progress across the 23 metrics that we're measuring.
Right. And homelessness is getting worse, you say?
Yes. So there's a slight increase in the amount of people experiencing homelessness, and that's one measure that we are looking at.
Do you think there should be more public housing, government actually building houses like they used to do in the I don't know, the 50s and 60s? What do you think?
That certainly would be one option, because we've let the proportion of stock that is social and affordable is down at 3% of stock, and in the period you were just referring to, it was more like 6% when we were actually building social and affordable housing. It needs to be financed by someone. The market won't deliver it on its own. So the Housing Australia Future Fund is one way to put money into the system. Although I would say that the community housing provider segment works very hard to deliver housing, but it's largely fragmented and quite small scale, so difficult to deliver the amount that we need. And so one option would be for the government to directly build, as we did previously, because, as I said, the market is not going to deliver social and affordable housing because it's not economic.
No, well, in fact, what seems to be going on is they're requiring new developments to have, say, 10% social and affordable housing. Do you think that's actually making a difference?
It's definitely a good thing to do, although I always get a little frustrated with the term affordable housing, because it's largely defined inconsistently, for one thing, around the country, but as a discount to market rent. Now, that doesn't make it affordable. It just makes it less than market. So you can say to a developer, please have 10% of your apartments which are going to be 10% below market or 20% below market. It doesn't make them affordable. So it's a good thing to have a requirement of developers to have some affordable housing in developments.
So you've been chairing this National Housing Supply and Affordability Council for 3.5 years now.
That's right.
I mean, it was basically born out of the National Housing Accord, right? So, I mean, how do you feel about it? I mean, have you been enjoying it? Is it something you feel like it's making a difference?
It is such a complicated problem, and I think what we have been able to do is to create a peer-reviewed model, which is providing, I think, very, very solid forecasts of supply and demand. It is it is taken as the number that the market says agrees. Yes, this is the number according to the model that we have produced. I think the evolution of our thinking along those 3.5 years has been very interesting to be part of, culminating in the outcomes framework that we were just talking about as a broader look at how the housing system is performing. And I took it on, and I'm very pleased to serve in this capacity because it's such an important social problem that we are creating in Australia, which is being divided into people who have housing wealth and people who don't, as you've pointed out in some of your work. And there's a deep inequity in our system. It has enormous social consequences across a whole raft of outcomes, including education and health and wealth and intergenerational inequity. And so it's such an important area for us to get right so that we have healthy communities where people have housing security and are able to live in fit for purpose housing at a price they can afford.
Yeah, and I suppose the core of the problem is that the house price to income ratio has gone from 4 times to 8 or 9 times, depending on where you live, and I think it's even above 10 times in Sydney. I mean, I suppose the question is, do you think that given all the things that are being done now, including your work, that ratio, the ratio of housing to incomes will go back to what it was, or is Australia going to have to get used to the way it is now and just hope that we can keep it where it is rather than increase that ratio even further? What do you think we can expect to do?
I think your latter comment is the right way to look at the situation. I cannot see a scenario in which we wind back to 3 to 4 times income for house prices. So we need to make sure that we don't let it keep rising. So I think the best I can think of is that we keep the ratios largely where they are. Where all the modelling around the recent tax changes that Treasury's done suggests that house prices will flatten or growth will slow, but they won't fall. It's very rare that you get significant falls in house prices in Australia if you look at the long-term data. So I think we would have done an okay job if we keep the ratios where they are.
What does that mean for the country, do you think? I mean, because, with the ratio where it is, everyone talks about an affordability crisis. So are we basically looking forward to a permanent crisis?
I think what it does mean is that more and more people will rent. But some people will never be able to own a home. And we've seen the proportion of renters steadily increasing. And so we need to think about the rental stock. We talk a lot about house prices, but 30% of Australians rent. And that number is going up and will continue to go up because of the house price escalation. So thinking about what would make a better rental market, what would be better rental stock, including having some institutional ownership in that sector to provide secure housing of good quality that give people security of tenure in a rental format. And we are in a situation that we've made for ourselves over decades of underbuilding, where it takes 11 years to save for a deposit. The new mortgage current rates takes 45% of the median income. Rent takes 30% of the median income. They're very significant costs.
And one of the issues, given that it now takes 11 years to save for a house, a lot of people, as you say, that can't do it, or at least just takes too long, which means that the early inheritance comes into play, what's being called the bank of mum and dad. Is there some way of, in some way, institutionalising that, do you think? Is that going to have to become a part of the way we live in Australia, that, you don't have to wait till your parents die in order to get the inheritance, you have to get it earlier?
Well, certainly the Bank of Mum and Dad is providing quite a lot of financing into the system. I'd like to see more institutional investment into the system, which currently is focused on the build to sell sector, but I think would be very good for the system to have institutional owners of high quality, secure rental stock for the amount of time that people are renting.
Yeah, that's a very good point. I mean, we haven't talked about build to rent, which has been a part of the policy mix. Do you think that what's being done in that space on that score is going okay? I mean, should more be done to encourage institutions to build housing developments, apartment blocks, so they can just rent them out and own them?
Absolutely. And in fact, Australian super funds invest heavily in this sector overseas. They just are slow to invest in it in Australia. And it's largely a nascency problem because institutional investors, and we actually wrote a report on this 3 years ago, the institutional investors will say to you, there's no price discovery. You have to build the things. That's very complicated. All the things we know about how hard it is to get planning. They're not entirely sure how the income stream will behave. They're not entirely sure what downtime will be between leases. There's a lot of risk. There's a lot of unknowns still because it's a very nascent industry, but it is growing and there are a number of participants in it. 5 years ago, people would say to me all the time, build to rent will never work in this country. But now it's an accepted asset class. It's small and it will take time to grow. And I look forward to the day when Australian super funds invest at scale in Australia like they do overseas in this sector.
Yeah, it's interesting that they invest overseas. Is there something the government could do to make it, to encourage it in Australia more?
I think it will just take time. It's not. I don't think there's any policy setting that would take away the perceived risk currently until the institutional investors see how this asset class behaves over time. And there's enough stock that they can buy one rather than build one.
Just finally, back to the housing accord target of 1.2 million and, the number that you came up with for net new dwellings over the 5 years of 862,000. Do you think it's possible they'll catch up? Or should they just accept that they'll fall short by then and it'll just take a year or two longer?
I think that having the target is a very important thing to galvanise a system, as we were talking about before. And it's not necessarily a question of falling short of the target or not. I'm very careful to frame it around the 1.2 will be met. That number will be met about a year after the accord period, which isn't too long after the accord period. And there are so many things in the system now that are pointing in the right direction that if we can get costs under control, maybe we can accelerate faster, if we can improve productivity, if we can crack modular construction, if we can make sure that the planning system is working properly and all of the fast pathways that are now in place are actually pumping out approvals at scale. Maybe there is some upside on that number. But the important thing is to keep going with persistence to build supply into the system because that is the only answer.
Thanks very much, Susan Lloyd-Hurwitz. That's been great talking to you.
Pleasure.
Thanks so much for joining me on That's Business. You can find That's Business on the ABC Business Daily feed every Friday. So you don't miss out, make sure you follow ABC Business Daily to find us on ABC Listen or wherever you get the podcasts. Dan Ziffer and the ABC Business Daily team will be back in the feed on Monday.